Big coffee chain leaving China, closed 44,000 stores. Things are tough in the coffee market there. Find out how businesses are dealing with the challenges and what surprises might come next. The closing of the coffee shop brings profound sadness, highlighting the difficulty of saying goodbye to this cherished place. The deep sorrow stems from the emotional bond formed with the businesses over time. Customers, familiar faces, and the comforting aroma of freshly brewed coffee all contributed to a sense of warmth and community. The closure represents more than just the end of a business. It symbolizes the loss of a space where people come together, shared stories, and found solace in the simple pleasures of a cup of coffee. The impact extends beyond financial aspects, reaching into the heart of those who frequented the coffee shop. The closure serves as a poignant reminder of the transient nature of things we hold dear, evoking a bittersweet mix of nostalgia and longing for the moments that will be missed. After closing the shop, to sell leftover items as scraps to get some money back, this shows how hard it is for catering businesses that don't do well financially. In another example, a friend's coffee shop invested a lot of money but had to close down after just 3 months. This shows that the coffee industry can be tough, and not all businesses can make it. There's also the case of Cafe Amazon, a foreign coffee chain. It faced problems in China and had to stop its operations there. This happened because of pandemic restrictions and economic problems. These stories underline the struggles that businesses, especially in the coffee industry, face. Closing down shops and selling things as scraps highlights the financial difficulties many businesses go through. Even big chains like Cafe Amazon can face challenges in different countries due to the unexpected events like the pandemic and economic downturn. It's a reminder that running a business, even a coffee shop, is not always easy. In the Chinese coffee market, local coffee brands initiated a price war by lowering coffee prices to compete with each other. This strategy has affected the profitability of coffee shops, including Cafe Amazon. Although Cafe Amazon withdrew from the Chinese market, it redirected its focus to Southeast Asia, making investments in Cambodia and Vietnam. The region also witnessed a wave of coffee shop closures in China, with numerous social media posts detailing bankruptcy and closures. This trend has posed challenges for the coffee industry, impacting various businesses. The competition among local brands and the challenges faced by Cafe Amazon in China highlighted the complex dynamics of the coffee market in the region. Despite the setbacks, Cafe Amazon is striving to establish itself in Southeast Asia, indicating a strategic shift in its business focus. The widespread closure of coffee shops in China underscore the tough environment for coffee businesses in the country, raising questions about the sustainability and resilience of the industry in the face of economic challenges. China faces economic challenges seen in numerous closed coffee shops and the shrinking manufacturing industry, causing difficulties in reviving economic momentum. The catering industry feels the impact, with the rise in coffee machines, disposals, and closures reported by a recycling company. Key economic indicators like manufacturing PMI and non-manufacturing PMI highlight the challenges, signaling a contracting manufacturing sector and deflationary pressures. In response, the government is taking action to boost economic growth. The People's Bank of China has reduced the deposit reserve ratio and injected 1 trillion yen into the market. These measures aim to stimulate economic activity and address the challenges faced by businesses. The hope is that their interventions will contribute to the recovery of the economy, especially in sectors like manufacturing and catering, which are grappling with closures and contractions. The success of these measures will be crucial in restoring stability and growth to China's economy. During China's efforts to tightly manage the COVID-19 pandemic, the economy faced notable setbacks as foreign investments withdrew. China's economic strength had been significantly supported by funds from other countries. The abrupt departure of foreign capital posed challenges and hurdles for the nation's financial stability. This reliance on external investments had played a crucial role in sustaining China's economic growth. The sudden outflow impacted various sectors, affecting businesses and employment. The government had to devise strategies to mitigate the adverse effects, emphasizing the importance of building a more resilient and self-sufficient economy. This experience prompted a reevaluation of economic dependencies and a focus on developing internal strengths to enhance China's long-term financial stability. The departure of foreign investments during the critical time had repercussions on various sectors of the Chinese economy. Industries that were dependent on external funding, such as technology, manufacturing, and services, experienced a notable setback. The diminished influx of foreign capital hindered the growth and expansion of businesses, limiting their capacity to innovate and compete on a global stage. The contraction of the economy was evident in unemployment rates and reduced consumer spending. As foreign investments dwindled, job opportunities diminished. contributing to a rise of unemployment. The overall purchasing power of the population also took a hit as the economic downturn affected disposable incomes and consumer confidence. In places like Qinshan, a city, there are fewer people because of the foreign money leaving. This affected different businesses like real estate, which is about buying and selling houses and buildings. With fewer people, there's less demand for houses and other things, making it hard for businesses to do well. Taiwanese businesses have been reducing their investment in China, opting instead for increased investments in the United States, Europe, and Southeast Asia. This shift is evident in the data, which indicates a decline in approved investments in China. Several factors contribute to the decrease in Taiwanese investment in China. One significant factor in China's economic downturn, which has made the business environment less favorable. Additionally, tensions between Taiwan and China have played a role, creating uncertainties for businesses. Difficulty in conducting business operations in China has also been deterrent for Taiwanese investors. The challenges faced in areas such as regulatory compliance and market access have led companies to reconsider their investment strategies. Moreover, concerns about political and social risks in China have further influenced the decision-making of Taiwanese businesses. These concerns include potential changes in policies and socio-political conditions that could impact investments. In response to these challenges, Taiwanese businesses are actively redirecting their investment to regions such as the United States, Europe, and Southeast Asia, where they perceive more stable and favorable business conditions. This strategic shift reflects a broader trend in the evolving landscape of Taiwanese investment preferences. Concerns have been raised about the reliability of the official economic and trade data from China, creating potential risks for corporate investment decisions. In response, Taiwanese businesses are taking proactive measures to navigate this uncertainty. Rather than waiting for issues to arise, discerning companies are opting to exit China early. To mitigate risks, these companies have diversified their investment across different regions. Instead of solely relying on China, they're spending their financial resources to other areas. This strategic approach aims to safeguard against potential problems arising from unreliable economic data in China. So basically, businesses are making prudent decisions to avoid over-reliance on a single market. By diversifying their investments, they're adopting a cautious strategy to ensure their uncertainties surrounding China's economic information cannot significantly impact their operations. This thoughtful approach allows companies to navigate the complexities of the economic landscape with resilience and adaptability. In line with the ongoing global trend of reducing dependence on the Chinese market, Yen encourages companies to look beyond borders and explore investment opportunities abroad. By spreading investments internationally, businesses can create a well-rounded and resilient investment portfolio. This approach not only shields companies from potential challenges in the domestic market, but also allows them to capitalize on emerging trends worldwide. Yen's advice emphasizes the importance of aligning with the changing dynamics of the global economy. Diversification provides a safety net, reducing vulnerability to economic fluctuations and uncertainties in a single market. It offers companies the chance to participate in various industries and regions, fostering adaptability and sustained growth. Chen Yen's counsel serves as a proactive strategy for companies to future-proof their investments, ensuring they remain competitive and agile in the ever-evolving landscape of international business. This move reflects the growing awareness of the benefits of a global approach, minimizing dependency on a single market and embracing broader economic landscape. Chen Yen's message underscores the importance of aligning business strategies with the evolving dynamics of the international market, fostering adaptability and sustained growth for companies willing to explore new horizons. So, the exit of the world's sixth-largest coffee chain from China reflects the challenging landscape of the country's coffee industry, marked by intense competition and economic difficulties. The broader impact on business underscores the need for resilience and strategic shifts. Amid China's economic challenges, Taiwanese businesses are diversifying investments globally, emphasizing adaptability. Chen Yen's insightful counsel advocates venturing beyond China for enduring prosperity, stressing a well-rounded international strategy. Engage with her wisdom on navigating global business trends by liking, sharing, and subscribing. Stay informed, broaden your perspective, and foster sustained growth in the dynamic landscape of international opportunities.